Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario on the 1 hour time frame, where we are looking for a 5-wave impulsive structure to the upside. Based on the time this range has taken so far, it does make sense to start to count this as a wave 4 and then a wave 1, 2, 3 sideways 4 and a wave 5 towards the upside. The invalidation for a wave 4 is the 0.618 at 57.6k taken from the low to the high of your wave 3. Has to be said though that most commonly your wave 3 will move to at least the 1.618 trend-based fib extension taken from the start to the end of 1 to the end of wave 2 at 67.5k, but clearly we haven't made it. We just barely hit the 1-to-1 trend-based fib extension taken from the same pivots, meaning wave 3 here is the same length as your wave 1. Now, therefore, if price would move to the downside, hitting this 0.618 level at 57.6k, then yes, a wave 4 is invalidated, but it does open the door for actually a more bullish scenario, which is a double 1-2, where we then have a wave 1, 2, 1, 2, and then we get a bigger wave 3 towards the upside. What is important by all means for the bulls is to hold this low, 54.5k. In any bullish scenario at the moment, you do not want to see this level lost. This is the invalidation for the bulls, and if price does take out this low, the probabilities are incredibly high. We're going to revisit the lows and make lower lows. The bearish scenario here on the 1 hour time frame is a 3-wave structure to the upside in an ABC. The most common target for your wave C is between the 1 and the 1.236 trend-based fib extension taken from the low to the high of A to the low of your wave B, giving you a target between 62.6k and 64.5k. In this area, we have one main area of interest here, which is the daily naked point of control at 63.1k, which, as you can see, is actually not yet touched, and it would actually be quite nice to hit it. If this, however, is the end of your wave C, then for price to move significantly to the downside, we actually want to see impulsive structures to the downside on the 15-minute time frame. So let's zoom in to the 15-minute time frame here. And what we are then looking for is either an impulse, a diagonal, or a multi-1-2 to the downside in this particular structure. Now, if we're looking for an impulse to the downside, we want to count a 5-wave move, 1, 2, 3, 4, 5. No overlap allowed between a wave 1 and 4, but as you can see, lots of overlap in this move to the downside. So a impulse is very, very, very unlikely. Then we have a potential double 1-2 here, where in a double 1-2, we want to see a wave 1, 2, 1, 2, maybe a third one for good measure, but eventually we want to see a very impulsive move to the downside in a wave 3. And it is weekend, and most commonly in the weekend, price tends to move sideways in a sideways ranging structure. Yes, price can move towards the upside, it can move to the downside, but most commonly it will contain itself inside a bigger range. That is most common based on the probabilities and the data, and it is not very common for a wave 3 to start in the weekend. So therefore also a double 1-2 doesn't have great probabilities, and besides the timing, it's also the fact that this range over here is already quite long, and this range so far is longer than in time than any of the previous ranges that we had over here, which also lowers the probabilities for a double 1-2. Now this then leaves us with the potential of a diagonal to the downside, and for a diagonal we want to count also of course a 5-wave structure to the downside. Now it's good to know that there are two different diagonals, and this might be a little bit technical, but let me explain. We have a 5, 3, 5, 3, 5 diagonal, which means an impulse, 5-wave structure, 3-wave zigzag up, 5 zigzag 5, right? So that is one version, and you have the version where all of the waves are 3-wave zigzag family structures. Now, if we look at version number 1, where we are looking for an impulse down, zigzag up, impulse down, zigzag up, and an impulse down, then what you can see in this case is that your wave 3 is shorter than your wave 1, but also than your wave 5, and that is not allowed. So then we have to switch to the version with all of the waves being zigzag structure. So we then have ABC, 3-wave up, ABC, 3-wave up, and another 3-wave down. This works. However, the first move towards the downside, labeled as an ABC, has an incredibly short wave C. If you take a trend-based fib from the start to the end of A to the end of B, then you can see that this wave C here did not even reach the 0.618 trend-based fib extension at 60.3K, which would be an absolute minimum target for a wave C. So that is not too great for this scenario, but besides the fact that wave C is here very short, there's not really a hard invalidation. The absolute minimum target for wave 3 really is taking out the low of your wave A, which it has done. So there is at least the potential for a diagonal here, and then a 5, a 3, and eventually a 5 to the downside, even though again, you can't really give it the greatest probabilities. And then the only alternative that is left is that in this sharp move down, you have a zigzag, and this is your wave 1. Then you have a 2, a longer 3 in time, a 4, and a wave 5. Officially, this can work, right? You do have overlap over here between the end of your wave 1 and the highs over here of your wave 5. If I take a horizontal array, you can see that the line is touched, so at least there's overlap between wave 1 and wave 4, which is what you like to see in a diagonal. But you do need to somehow count this as a zigzag, which means you have to go to the 3-minute or the 5-minute time frame, which is something I don't like to do. I prefer to sit on the 15-minute time frame or higher. So basically the conclusion is that locally this move down, we can't count it as an impulse. We can't really count it as a double 1-2. The timing is not right. This range is very, very long, which means we are left with a diagonal, which does have some probabilities, but it's definitely not a clean diagonal structure. So it does increase the probabilities for this move over here to the downside to be a corrective structure, not an impulsive structure, which does in turn increase the probabilities to sooner or later still take out this high. If we then look at the CVD divergences, then locally we had these local bullish CVD divergence play out with the recent push here towards the upside. Zooming out, however, to the 15-minute time frame, you're going to be greeted by a bigger bullish and a bigger bearish CVD divergence. Now, the bearish CVD divergence that you see on the chart here is, however, a fourth bearish CVD divergence with the same pivot, because as you can see, price here moved down and created its first bearish CVD divergence with the high over here. This one played out as we then took the low, started ranging, created still bearish CVDs, played out again, right? Then moved up, still bearish CVDs, moved down again. So we already had 3 bearish CVDs that played out with the same pivot. Therefore, the probabilities are a lot lower for that same pivot to give another successful bearish CVD outcome. But if we then go to the 3-minute time frame, what I like to see is price move above this high here, 61.1K, because on the 3-minute, this is the first time that this particular high has a bearish CVD divergence. So this is a first divergence. If price can manage to move above 61.1K, take out this high before taking out the lows, it would increase the probabilities as well for price to look at least for a bit of a bigger retracement back towards the upside, but also for price to take out the high. So if we then finally look at the probabilities of the different scenarios, then currently on the 1-hour time frame, the probabilities remain higher for the bullish scenario, where we are looking for either a wave 4. In that case, we don't want to see 57.6 hit, or the potential at least of a double 1-2, but the probabilities at the moment remain higher for price to eventually take out this high, and a very clear invalidation of any bullish scenario is price moving below a 54.5K before taking out that high, definitely increasing probabilities to then move lower to new lows. On the 15-minute time frame, the probabilities are also higher that we are looking at the moment for a corrective structure to the downside, not an impulsive structure. Based on the diagonal over here, there is at least a bit of probabilities we can give to a diagonal, but it's definitely not clean, which does increase the probabilities here for some corrective structures. But it is weekend. Most commonly, the range moves sideways, so let's observe that range together. And what I would personally be looking for to increase the probabilities for upside and price taking out this high is, first of all, taking out 61.1. That would be nice, but also for price on a 15-minute time frame to continue moving towards the upside with bullish CVD divergences, and also invalidating that little bearish CVD divergence we have locally. That's something to at least start with. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.